fellow investors. Welcome to another episode of Ritter on Real Estate, where we teach you how to passively invest like a pro. Today, my guest is Bob Couture. Bob has held positions in public relations, finance, and business administration in several top Fortune 500 companies. Additionally, he's a retired Army officer with over 22 years of experience and service. And he currently is a broker. He's got a piece of a property management company, and he's an active real estate investor as well. So he's wearing a lot of different hats. So Bob, we're excited to have you here today and learn from your experience.
Yeah, well, thanks for having me, Kent. I'm really excited to be here and talk to your audience.
Well, great. So Bob, why don't you start out, just tell us a little bit more about yourself and your story and how you got to be where you are today.
Yeah, thanks. So I started corporate America. I was working for, my last job was with an aerospace and defense company. And while I was there, I was also in the National Guard. So I had a deployment. I came back a couple of years later to the job, and the company was different. I was different. And it was time to kind of do something for myself. And as I was trying to figure that out, I grew up in a construction family. My dad was an interior, exterior painter and carpenter. So I was around that. And then when I was thinking, kind of get back to something like that, so I decided to get into house flipping. And as I started doing that, my first couple properties didn't flip. And so I was forced to keep those, and the mailbox money started coming in. I was like, hey, this is not too bad. So continued flipping, but then collecting more and more properties. And I like the single family, but when you get one vacancy, that means 100% of income not coming in. So I started looking at multifamily and started doing that small. Came across a partner. We had kids that were playing on soccer together. His family had been doing syndications. His dad had been doing syndications for the last 40 years. He wanted to employ that model, and I had an area and construction assets. He had that model, and then we got into business doing that, and we did that. Started that in 2017, and we're at about a half dozen syndications thus far.
That's fantastic. So your main business these days is focused on the syndications?
Yes. So, and then with the syndications, we have a property management company in Springfield, Massachusetts. That's where we started to do most of those investments. I was a broker there. That I had the brokerage to help satisfy our finding house flips, and then use that license to find apartment buildings.
Gotcha. Well, really cool. A lot to unpack there. If we take a step back, though, you mentioned you were, you were at a company, kind of came back, you realized that it was time to make a change. What was it that attracted you to real estate?
Flexibility. Well, there were a couple of things. One was it was something that was comfortable with me. I kind of grew up on it on the construction side. My dad took a lot of summers away from me to go work with him, so I was around all that. And then the second, my wife's family is in commercial real estate, and everyone was encouraging me, get in real estate, get in real estate. And what I was hearing is being an agent, and that wasn't necessarily what I wanted to do, but that was something that could complement getting into the industry. As I started to do that more and more, I could really see a clear path to financial freedom, and then having the ability to be at the kids' soccer games or coach. This year I coached my daughter's soccer team. I don't know if I would have that ability or that kind of flexibility to do that if I was in corporate America.
Yeah, I mean, we share a similar story in that way. That really resonates with me because, I mean, my kids are really my why for why I wanted to set out on my own. It's exactly that, that freedom, the ability to go to the recitals and all the games and do all that and not have to miss out on what really, if you boil down to it, is the most important part of life, right? I mean, at least from my perspective. So yeah, I completely understand what you're saying there. And you're just another of many proof points of how real estate can help you get there and help you achieve the other goals that you want to achieve in your life, but by giving you that taking away that financial burden of trading your time for money, right? And I love those stories.
Yeah, yeah, well said. So my daughter will not remember any of the deals that I've done, but she will remember if I didn't make it to a game, or she'll remember the season that I coached, or the multiple seasons. So that really brought it together for me this year.
Yeah, I love that. That's fantastic perspective. So why when you're looking at real estate, there's a lot of ways to go, right? And I know you said you did some flips and different things. What was it that drove you to multifamily of all the other avenues?
It seems to be the natural progression. I find it interesting as I was talking to owners when I was making that transition from house flipping to multifamily. It it seemed a lot of the owners were, "Hey, welcome. I was doing the same thing. I did this. This was my trajectory as well." Also, the house flipping will always be a job because that will require the next house to be flipped. Buy and hold, that will be there. That will be there. That I can pass on to the kids. That's an opportunity to create generational wealth. Um, Once the house flip is done, it's where do you invest? You're usually investing into the next one, and so that's where multifamily was the big draw.
So the ability to just get that scale and something that really, I mean, you talked about that earlier, single family, one tenant leaves, you're paying that mortgage, multifamily, you don't have that issue. And then the ability to have an asset that you can really hold long term and that you believe in long term. And are those kind of the drivers?
Yeah. If I look at my personal financial statement as I was doing that through house flipping, those assets weren't growing because those were coming on books, coming off the books.
Yeah.
Now, as in holding and holding, that's growing every year. And
Yeah. Yeah. That's powerful, really powerful. So I know you touched on it a little bit, but just to continue kind of down the vein, how has your life changed now that I mean, it was years ago now you left corporate America and you've been a full-time investor for a while, but I mean, just paint a picture for folks. How has your life changed? My hope is to continue to inspire more people to pursue the path.
yeah. So I talked about one of the whys of being my children, but the
Hmm.
other is my parents as they're aging. Springfield, Massachusetts is where I grew up. My parents are still there. My sisters are there, and having the property management company and our investments in that area, I get to live in California, but I get to see my parents just about every month. I go back there to check on the investments, check on the property management company, and I get to see my folks. So it becomes a lifestyle play, if you will. And as they continue to age, it's more and more important to be there, and I'll have that flexibility to spend more time there as my kids go off to college, and then my wife and I are talking about where are we going to split our time and live. So I don't. Hermosa Beach, California is where we live now, but we don't have to be here. This job is portable. We could even there's talk about even a pre-retirement where we take a couple of years off, and if we get our systems in place and the right people at the property management company, this can be truly. Although I'm an active investor because I need to be, I can make this into a passive investment thing for myself. And then as I look at my investors, it's great for them because they truly can be passive. I have got one
Hmm.
investor. I love the way he puts it. I love these syndications because I can write a check and I can collect checks, and I don't have to deal with anything in the middle.
That's right.
It's spot on. No tenants and toilets for him. He just writes and collects, and that's it.
Yeah, absolutely. And so you really have a unique experience in that you've been a broker, you own a property management company, you're also an investor. So I'm curious, how does your experience being a broker influence your real estate investing and the buying decisions that you make?
Um, how does it influence the buying decision? Well, it does give me more insight on what's happening in the market, and as I'm developing relationships, as I talk to different owners, I can give them different owners that we're looking to potentially buy from. I can give them different options. They could sell to us without going to market. They could go. We could list and go there. If it doesn't work for us, it may work for some other investors in our group. But I have to say, I haven't been so active on the broker side. I spent more time developing relationships with other brokers and to have those deals coming. So I I
Sure.
a lot of brokers will not do co broke on deals, but for
Yeah.
us, the most important thing is getting the right deal for our investors, and not a deal that is going to satisfy Bob the broker.
Hmm. I gotcha. Really, same question on the property management side. So, how has being intimately involved in property management? I mean, how has that influenced the decisions that you make as an investor with your syndications?
Yeah, great question. Great question. So we're for Springfield, we are the property management company. So that gives both us and our investors a level of security, knowing that we're minding the store, that we have that level of control on. We do have some investments in Southern Maine where there's third party brokerage, and they're doing great, by the way, and nothing there, but it's a little bit of a different feeling. Like, you're waiting for that report. You got to kind of pour through it to read through the tea leaves, versus just knowing intimately every day, really what the problems and the issues are, that we can keep the small problems as small problems and not let small problems become big problems.
Yeah, I mean, I think that intimate knowledge. I'm sure you have. Are you managing just your own portfolio, or are you managing for others as well? Are you fee managing?
Yeah, fee managing, but that's something that is either they were already investors and they wanted to want cash flow properties that are out of state, then we'll do that. And it's been very helpful for our investors, because the first thing that the bank's going to ask is, well, who's managing the property on the ground, and then we
Hmm.
have that, and we've got a great reputation in that area, and so that's been helpful for our investors. We don't do a ton of it. Most of it is either our personal property, or the syndications.
Gotcha. And was that something you guys started from the beginning, or was there a certain scale where you said, okay, it makes sense to take over ownership?
From the beginning. Yeah, I was doing that on a smaller scale when I was flipping houses and had my own property. Then we did it through the syndication partnership, and then just kept growing from there.
I gotcha. So I don't often touch base with folks that are investing in the Northeast. It's one of those areas that not a lot of people focus on. So I want to explore that a little bit because I don't get this opportunity much. Tell us what attracts you to that market. I mean, obviously being local, there's a certain knowledge piece, but what else is going on in your markets that makes them attractive investments?
The a couple things. One, it is a cash flowing market. Springfield would put it on the more on the tertiary market, and so competition wise, it's been helpful. We're at buildings that are 20, 50, maybe 75 units, where the bigger players won't look at anything below 100. And so competition wise, that's been good. Gives us an opportunity to deal with owners versus institutions. So that's helpful. It makes it a little bit more personal on acquisitions. It was a lifestyle play for us as well. There's a strong element of affordable housing, and for some want to run away from that, but there's great opportunity in that segment, and if planned for, it can be great. And during the pandemic, that it was very comforting to get those direct deposits from the agencies right away. As we're helping tenants that are struggling, at least we're getting the funds in from the agencies.
Gotcha. Yeah, expand on that a little more. What are some of the differences in owning a property that is an affordable housing property versus just a normal market rate apartment?
Yeah, surprisingly, the rent capture is a bit higher than market. And then for this particular market, we would have tenants that would the turnover is much higher on market, because if you're paying $1,300 a month for a 3-bedroom, you'd be paying less by owning a house, and so you're not going to be staying with us very long. If you are a subsidized tenant, chances are you're going to be with us for 5+ years. So our turnover costs are lower. If there's some problems with paying rent, the agency can assist. We can bring in other resources. So that helps a great deal. The market rent tenants, yeah, there may be there are fewer inspections. So on the downside, our units are inspected a lot more, and rightfully so. You want to make sure that it's quality housing for the tenants, and if things are broken, they need to get fixed. And then if the tenants are breaking it, then the agency is there saying, "Hey, this is going to be something on you, and you've got to get it fixed to keep your subsidies." So there's some support there as well. I'm sorry, I think there's a truck you can hear in the background, so my apologies.
It's all right. There's always things going on. Um, just and thanks for kind of outlining the differences. I think that's helpful for people to understand. And there obviously are benefits, of both sides, just as you outlined. Um, as you're as you're looking at opportunities, I love to dig in a little bit on people's thought process, and how do you evaluate your deals, because I think it's different in different markets and with different syndicators. So when you and your partner are looking for new investment opportunities, I mean, what are the things that really stand out to you as a deal that you would want to pursue?
So first is the gate for us is a 15% internal rate of return. So we got to be pretty close to that for it to pass. The first, is it going to pass on the numbers? And two is looking, what is the value add opportunity? But even before that is, does it work today before executing that? Does it pencil right now? If it does, then that's great. And then what is the upside? Value add being, can we raise rents? Can we create 2 bedrooms out of a 1-bedroom? Can we create a 3-bedroom out of a 2? And then these are older buildings, right? We're talking 1900s on a lot of them. So has the plumbing or electrical been updated, or is it, what's that going to be like? Yeah, the envelope and the structure, like most are looking at, how much is that going to cost? What kind of capital expenditures? And then are we putting ourselves in an area that is growing, or not? What kind of competition? So those are kind of the main ones, and we want to make sure that we're getting a healthy return to our investors. That return is not going to take, we're a 10-year hold, but we want to be giving distributions out as soon as possible. So we want to, we have an eye on that.
Gotcha. And most of your holds are 10 years?
10 years. Yeah.
Gotcha. Gotcha. Very good. So it sounds like, as I break that down, you're looking at, you're obviously judging the property, it starts with the returns. It sounds like, can you hit the returns? And then you're kind of working into, okay, what are the expectations that we need to make, and how realistic are those expectations? And then what's the market, and is that a growth market? Is that right?
Nailed it.
Very good. So Bob, what's ahead? What does 2022 look like for you and your team?
I was talking about affordable housing. Now we have an opportunity for Class A building in Connecticut. So we're looking at that, or that's under contract. So we're really excited about that one. We are also we're continuing to look inward and saying, okay, before we go and get too big, get too in front of our skis, is what can we do to optimize our current investments? A strange byproduct of this, of COVID, was a real putting the magnifying glass on expenses, right? Like, we all know it's like there's no secret to the sauce. It's increase income and decrease expenses, but no one really cares about expenses when the income is really strong. When the income wasn't coming in, it was like, okay, we've got to figure something else out. We've been really good about exploring water conservation, lighting, anything to bring down our expenses, reinvesting in heating systems that are more energy efficient. So I think 2022 is going to be a lot more of that. We did a couple of test runs on some properties with toilets and low flow aerators and the like, and that is bearing fruit. And so now we'll do that at a larger scale and continue to do that.
Oh, that's awesome. I love hearing the focus on expenses and digging into the details. I'm sure with a property management arm, it gives you some really good insights into what's really driving those expenses, and how you can impact those. And a lot of it sounds utility related. So
very much so.
Some good opportunities to improve and also help the environment a little bit. So fantastic. Bob, before I let you go, I want to take you through our keys to success round. There's 4 questions I want to ask you. The first one is, put yourself in one of your investors' shoes. If they could only ask you one question before they make an investment, what is that one question they should ask?
They're asking me that one question, or Matt?
They're asking just a general sponsor. If you could only ask somebody who's going to sponsor a deal one question, what is that one question?
What's your knowledge of this particular market?
Yeah, that's good. I mean, I think the market, it always starts with the market, right? You can't change the neighborhood around the property.
We get all the time, like, well, why Springfield, or why Southern Maine, or why and that becomes I grew up there. I know that area. I want to see that community thrive, and just having that intimate knowledge of where not to be and where to be.
Yeah, you're really owning your backyard in Springfield.
Yeah.
Gotcha. What are you most proud of in your career?
On the real estate side, I took on a property that I knew, this was in my personal portfolio. It was an 18-unit property, and I knew it was going to be a challenge, but I didn't realize how big of a challenge. And this was, I had cash paying tenants. They were paying on time. If I let it be, it would have been fine. But the problem was drug dealing and after hour parties, and they were just kind of terrorizing all the good tenants that were in there. And I evicted 14 of 18 units in a matter of 6 months and really turned the property around. Even the mailman says he feels safer going there now. So I'm proud of that. And I didn't get any help from the municipality. I didn't get any help from the police department. We just really had to hunker down, use the courts, and make that work. And that property is turning around year over year. It's getting better. Now we're in talks with the economic development for the area, and they're going to give us a new sidewalk and street and lighting. And it comes into because we put the effort in over there, and we're going to turn that around. It's already turned around, but it's going to be a nice area.
Well, congratulations. The hardest projects are usually the most rewarding.
Yeah, some sleepless nights for sure, but
Yeah.
we made it work.
How about what's a book that everybody should read?
I really like Millionaire Real Estate Investor, Gary Keller. I think that is a great book to come on the heels of Rich Dad Poor Dad. Rich Dad Poor Dad mindset changes the mindset for folks. Probably the most quoted book of everyone that gets into the business. But Millionaire Real Estate Investor to me was the blueprint to start to grow the business, and it was really impactful for me and helped me go from single family and pyramid up into multifamily. I 1031 I traded 5 single family units for 33 apartment units with another investor, and that was a big jump for me, and worked out well.
That's awesome. That's getting some massive scale.
Yeah, quick.
Bob, one last question. What is your number one key to success?
Don't create your own problems. Then the mantra for us in the property management company is if we ignore the tenants, then that's going to create a problem. And we don't ignore the tenants, but I mean that in the sense of we can't just dismiss any kind of issue. Small problems become larger ones if you don't address it. So don't create your own problems.
Yeah, that's fantastic advice. And with that, last but not least, Bob, if folks want to reach out and learn more about what you're doing, how can they get a hold of you?
They can reach me via email, bob@cp-propertygroup.com, or can always call 310-922-5436. I still pick up my phone.
Awesome. Thank you for sharing that. We'll put all that in the show notes so everybody can get a hold of you and blow up your phone. There you go.
All right.
Well, thank you, Bob, so much for coming on the show and sharing your knowledge. I think you have a really unique story. Appreciate you sharing your thoughts on your market and why you got into this and how it's changed your life and the types of investments that you're doing. And yeah, just really insightful. So once again, thank you for coming on.
It's a real honor.